cannot provide a loan to an SME. That is not what we do. So it's important for us to understand each other. So one feature is we will help the whole ecosystem. We have, for example, an African Digital Financial Inclusion Initiative that works at the very bottom of the pyramid to help entrepreneurs get access to digital finance and to digital banking. So that's at the very bottom of the ecosystem. And then we'll go all the way to this massive billion-dollar infrastructure. One example that we find, for example, is the Nacala corridor. Nacala corridor goes from a mine in Moatize in western Mozambique, goes through Malawi to the port of Nacala, again in Mozambique. So it connects landlocked Malawi with the rest of the world, of the economy. It was a massive infrastructure, rail and port, about $5 billion, and we helped finance that alongside a number of other partners. It was a privately led initiative. So we can go from the very smallest, but there we will work through special instruments like this Africa Digital Finance Initiative. We will work with SMEs, but through commercial banks. We do not work directly with SMEs. We will lend money to a commercial bank here in Rwanda or in Kenya or wherever in Africa, and that bank will then on-lend to the SME. So the first thing for trust is to understand who we are and how we operate. When it comes to the larger project, we are very stringent on our environmental, social, and governance standards. And that's something that also our partners need to understand. If they want to do a power plant quickly, well, that may not work, because our standards require detailed environmental and social studies to make sure that whatever investment we make does not have detrimental impact on the populations or the environment. Or if it does, we need to have mitigating measures built into that. So I think trust is first an element of working together and understanding each other.
Right, and now there are concerns within the private sector over the excessive red tape, as well as the long waiting periods. Now, could you kindly elaborate if the African Development Bank Group is planning anything around this or trying to find solutions to reduce?
No, so clearly, when an entrepreneur wants financing, he or she wants it right away, right? Typically, the idea has been established, the project is ready, they're ready to go. We have, I mentioned these environmental and social rules. We have governance standards, etc. So the reason they come to us is because they cannot get the financing directly through the commercial banking system. And so they require lenders who are willing to take more risk. When you take more risk, you also need to be more prudent in a sense, right? So it goes a bit with our terrain that our processes are longer than those of commercial banks. This being said, we need to be faster. We absolutely agree with that. And so, for example, on our side at the African Development Bank, we set targets in terms of speed of delivery to all our teams. We track them, and we kind of reward those that are, or give credit in a sense to those that process projects faster. But careful, speed is not always of the essence. We have to make sure that we balance different requirements, in particular the need to have a very solid project that addresses the issues for which the sponsor came to talk to us.
Yeah, right. As you've mentioned, that sometimes the private sector comes expecting the money right here, right now, when I want it. And what are some of the misperceptions that the private sector usually has when they are approaching either African Development Bank or any other institutions for funding?
So a typical misconception is that we operate like a regular bank, but we do not. Some features are the same. We have credit committees, etc. But we are really a lender of last resort. So we're only supposed to get involved if there's no other source of financing available. That means that we have really different processes. One typical misunderstanding is that we have a transparency requirement, and typically we have a competition requirement, meaning that most of the contracts that we finance need to be competitively tendered. And so that already creates a bit of a friction where you may have someone who wants a financing for something they obtain directly. It can work in some circumstances, but so by and large, understanding that we operate following certain rules, and particularly of transparency and competition, is really important to avoid any misunderstanding.
And earlier on, you mentioned some of the policies around the African Development Bank. So my question is, does the bank usually go an extra step to actually talk to the different governments of different developing countries to see how they can either create opportunities where they aren't, or how they can fast-track development, as well as create policies that can help that particular country?
Yes, absolutely. So since we tend to tackle the most difficult financing challenges, part of the difficulty typically comes from policies or regulations that are not well adapted. And so there we have an important role to play in terms of engaging with the government on convincing them to change policies. For example, if you want a private investor to invest in an infrastructure business, they must be able to recover their costs. That means that tariffs have to be set at a level that covers the cost. So we will then encourage a competition to make sure that we select the operator that will do so at the lowest cost possible, but the government has to be willing to allow those tariffs to be charged, otherwise you cannot finance the deal. So there are often discussions like that where you need to make sure that the two parties understand each other. Governments may have requirements in terms of, for example, repatriation of earnings. And so if you're a foreign investor coming to a country, you want to be sure that if you make profits, if you sell your company after 10 years or whatever, you will be able to repatriate your earnings. So in all these areas, there are two things we can do. One, we can advise governments to improve their regulations, make them more flexible. Two, we also have a guarantee product. So we can sell to the private sector a guarantee that, for example, at the end of their annual profits or their repatriation of capital will be honored and that they will get foreign exchange. If that does not happen because of controls or restrictions that exist in the country, then our guarantee will kick in and we will compensate them for this failure by the public authorities to stand by their own agreement. So there are mechanisms in place, these guarantee mechanisms, that can help bridge maybe the lack of trust that a private investor may have in a specific regulatory environment.